I have been getting asked one question so repetitively in the last 4 months. I wanted to answer it on camera, and that is 2022 a good time to buy, or should I wait till next year when things feel a little bit better? Now, in this video, Crystal, my sister, and I are going to talk from our experience of having bought over $300 million worth of property in Australia in the last 7 years. Woo! And we're going to talk about some of the pros in the current market, the things we're noticing on the ground from buying 3 to 5 properties every week, as well as the big picture stuff, as well as some of the negatives or some of the headwinds coming down the line. So you do a lot of the buying in the business at the moment, Crystal, with your team. You've probably been buying, what do you guys buy, 75 properties in the last 3 months or something like that?
Yeah, it's been pretty insane.
Business record, well done. There are plenty of people, despite what the media would have you believe at the moment, guys, taking action and buying high quality properties at discounted prices at the moment. But what are the things that you've been noticing, particularly in the last 4 or 5 months as the media's really been smashing property?
Yeah, for sure. There definitely was a shift, I reckon, around March, April, where things began to change, sort of boots on the ground, the feeling in the market. I think it came from a lot of people being scared, which you think is a bit of a negative, but it actually is a bit of a positive. I think it's kind of given, pushed a lot of the people out of the market that were kind of FOMO-based buyers. Only the people that are serious about buying are in the market. A few sellers are kind of fire sale a little bit, where they're feeling that pinch of maybe interest rate rises. So we're definitely sensing that fear in the market a little bit, but taking advantage of it as buyers, which we love. There really are some bargains everywhere. So we haven't seen this massive drop in house prices where you think, oh, things have completely dipped, but it's more so where there was the competition in the market a year ago, properties are selling for what they should be selling for. And we find it really, really interesting. There's you've got more time that properties are sitting on the market. You've got more negotiation power, which we love. You've got the opportunity to toy with the agents a little bit, throw some additional terms in there to protect you as the buyer. And all of those things sort of mean you're going to get a better price with that negotiation power.
You know, I think the positive in the market at the moment that we're both feeling is, instead of, you know, a property coming online or getting it off market and then coming online and selling in 3 days or 1 day, we've got a week, which means we're still trying to buy it in 1 to 3 days. But because the agents have been educated by the current market, and instead of having 30 or 60 people rocking up and 15 offers and one really emotional person that's missed out on 6, bumping the market by 50K on a property, we can now get it for that realistic price that 14 out of those 15 people would have paid a few months ago. In terms of the other positives, unemployment is at historically low levels, savings are at historically high levels, infrastructure spending is at historically high levels. There are jobs everywhere right now, like absolutely everywhere for skilled people, which is incredible. Rents have gone up in almost every capital city and major regional market in Australia by $50 to $100 a week. This year, they're expected to go up over the next year, according to CoreLogic, by another $100 a week. Interest rates, despite what everyone would have you believe, are still at historically low levels. Mine are still in the mid 3s. I know that even people getting a 5% cash deposit down is still getting rates as low as 4.5% at the moment. The Reserve Bank's being very clear that rates are going to go up by another 1%, which puts the rate that they're lending it to the banks at about 3 to 3.5%, and the retail rates will get as investors at 4.5 to 5%. Personally, for me, I started out with a 9% interest rate back in 2011, so for me, it's gold.
Even in 2016, my interest rate was like 6 or 7%. So it's come down massively in the last sort of 6 years, and it doesn't even look like it's going to go back to that level over the next year. And if it does, it's returning to normal. Like, it wasn't that long ago I bought our first property and we were at that kind of high interest rate.
You know, what the media's not telling you at the moment is when rates are going up, it's either to curb inflation, which is why they are at the moment, or because it shows the strength of an economy. I like them being set higher, because if we get ourselves in shit down the road, which we will, they can actually pull the rate down very quickly, and it gives people a buffer and some breathing space in the next GFC. Some of the other positive things that I'm noticing is ridiculous population growth up here in southeast Queensland. According to the ABS, 70,000 people moved up last year. Insane. Another positive, which is a negative for some people, but a positive as a buyer, is the banks have made it so hard for developers, and so has the Australian and state governments in the last 5 years. There is no supply, but over 300,000 or 400,000 people came back to Australia, expats and holiday makers overseas in the last few years. And so it's created this chronic Australia-wide, outside of Sydney and Melbourne, undersupply of properties. We've never, ever seen vacancy rates this low in Brisbane, Perth or Adelaide. Some parts of Brisbane we're buying at the moment are less than 1/4%.
Yeah.
A well-priced property is going in a day. We are also in the second half of the real estate cycle at the moment, and which historically has been exceptionally good for Brisbane price growth. The Reserve Bank of Australia is saying once they get inflation under control, to the major banks, they're also saying that they're actually hoping to be able to pull the interest rate back down by 1%. I know, based on looking at 50 years of history, for every 1% drop, we get 15% growth in property prices. They're actually saying it's going to drop 2%, which the economists are saying could result in a 30% increase by the end of 2026, which is amazing. Some of the other analysts we're following are actually saying some prices in places like Brizzy could be up 50, 70% by the end of 2026. We don't know. The last positive is the average Australian's wage is going up at the moment as well. And in many industries, particularly in engineering, IT, and some of the more like technical trade-based roles, I've seen wages go up by 25% in the last year, which again is phenomenal long-term, because once the cost of petrol and food normalises and building materials and cost of living goes back to normal, the incomes are going to stay at that point, which means property prices and rents can go up further.
Awesome, I love it. There's obviously so many reasons there that does sort of make 2022 a really good time to buy. There are a lot of positives right now. It's funny because we were talking off camera before, trying to throw around some ideas of the positives, the negatives, and what we're seeing in the market, what we're seeing in the broader picture Australia-wide. And we came up with a lot more positives than negatives. We'll get into the negatives now. There's always cons, obviously, which we want to talk about. But to be quite honest, it's pretty interesting to see that, yeah, the positives are really in favour.
It is strange, because if you listen to any content that I did in the last 2 years, my negative list was this long and my positive was this long. I don't mean to be insensitive, because I know a lot of people are really scared at the moment, but fear creates stagnation for most people, and stagnation creates massive opportunities as an investor. And I'm an investor, and because we're working for investors every day, that's what we want. So on the ground, Crystal, what negatives are you noticing at the moment?
So the main things I'm noticing, obviously coming sort of from the media down, like there's no question there are a lot of scary things out there that are being touted at the moment, with the interest rates rising, cost of living going up. It is making a lot of people scared, because this is all people are hearing, or this is what people are hearing in the mainstream media. And there are conflicting voices out there, but it's always good to know that there's people out there that are touting the positives as well. I know a lot of my friends are feeling the pinch a little bit, and it's making them scared. Should I be selling? Should I be investing in property at the moment? What should I be doing with my savings? And all of those are questions that we're hearing day to day as well. And it's no question that those things are a little bit scary. Even myself and my husband are sort of figuring out what to do with our investment portfolio as we hear about these things. But then you've also got to sort of take it back to the bigger picture as well.
You know, the thing about this type of market, when the fear comes through, so for me as an investor, this is the 4th time I've gone through it. Generally, these periods, and this is important to note, in terms of like the deep fear and the deep headline stuff, last for 6 to 9 months. So the last time this happened was probably between about the time we got back from Cairns from our holiday in February, March 2020.
2020, yep.
Up until actually that whole year was just really negative. There were, even CBA at that point said they expect house prices in Australia to drop 40%. Prices ended up that year ending up pretty flat, or even going up by 10%, and then the next year went up extremely well. The last time it happened before that was when the Australian government intervened. So this is Australian government, Reserve Bank of Australia intervention right now. They don't want inflation to be high, because it does hurt the average wage earner when the cost of everything goes up 30% and their wage goes up 5%. That hurts real people. But the last time the government intervened was in 2015, 16, 17, but really bad in 17.
Yep.
They basically made it almost impossible for investors to borrow money because they wanted to stop investors speculating in Sydney and Melbourne.
Yep.
And during that period of time, house prices in Sydney came back 15% in 9 months, declined. They actually declined by 12% in Melbourne. There was actually at the start of COVID too a 10% decline in every capital city in Australia, but the years didn't end that way because when confidence came back, people went, it's actually not that bad. The media had a field day with both of those stories. And then the third time I saw it was at the start of 2011. We'd just come off a GFC. Australia was still in a shit show financially. Luckily, I didn't know about it too much at that point. But when I was talking to people about buying, everyone was shitting themselves and nobody was. So what we know at the moment is the fundamentals of the Australian market based on some of those positives look good, but excitement from last year has turned into deep fear this year. And when you overlay some of the other stories in the media cycle at the moment, which are all horrible things for humankind, I think people have just gone, I'm exhausted and I'm scared, and we haven't seen interest rates go up in 10 years, and people haven't looked at 60 years of data like Crystal and I have and gone, there's no correlation between interest rates rising and property prices declining. In fact, the last time interest rates rose, they rose 27% between 2002 and 2008. They went from about 4% through to about 7 to 8% during that time. Property prices in Sydney and Melbourne went up between 30 and 60%. And in every other capital city in Australia, they went up more than 120%. So once that gets out there, people will feel more confident. And most of you guys listening will probably be thinking about buying at some point in the next 2 to 3 years, and there'll be a lot more people looking to buy at the same time. But for those people like us, like I've just bought a property myself, I shit myself for 2 weeks. It was really scary. I didn't like paying that cash out at the moment because of the uncertainty, but it was also nice to get something for 100 grand below what it's worth right now. So, I think the negatives at the moment are really just the fear, the interest rate rises and the cost of living, but all of the other fundamentals are heavily weighted in the positive right now.
Yeah, for sure. And it's interesting that things that are positive right now, the time on market, the ability to negotiate, these are things that a year ago, if you asked us, what are the positives and negatives in the market, they would have been on the negative side because properties were selling within 48 hours of being listed.
Sometimes up to 100 grand more than they sold for the week before.
Yeah, like they were selling for more than they needed to sell for. You had no time, you had no negotiation power. There was this massive FOMO. You were often competing with 20 people, and it's interesting to think that now those things have flipped and it's a really, really, really positive time to buy in terms of boots on the ground, what we're actually sensing. It's just getting that messaging out there and combating the fear that people are feeling to realise that fundamentally things are still okay.
So there's really only 2 decisions to be made at the moment, which every investor has to decide each year, and that is, am I in a position to buy? I either am, and there's 2 decisions that come off that, or I'm not. Sweet, you do nothing at the moment. You save your money, you wait for the equity to come back, and you come back to the market later. But if you are in a position to buy because your wages are okay, your savings are good, or your equity's good, then there's 2 decisions, and it's, I don't want to buy. I'm just going to wait and see what happens here, which is completely normal. And that's what 9 out of 10 people are doing at the moment, which is cool. I've done it before as well. Or I'm going to sit in this uncomfortable feeling. I'm going to really educate myself on the market, or I'm going to find a partner who knows the markets that are undervalued. And then I'm going to take calculated, strategic, safe action in the next. The problem that we've got here is by the time this video comes out, we'll have been 5 months into this shit show. And these shit shows only last for 9 months. And we've seen, our inquiry go from 40 or 60 people a week down to 3 people a week 3 months ago. And now, 10, 15 people are reaching out per week again. And the problem with that is just confidence is slowly coming back because everyone knows that interest rates are going to be 1% higher by the end of the year. Most people have realised they can afford a 4.5% interest rate, and the media is not having that same fear So I just want people to know that like this window of opportunity is not going to last forever. And maybe if you are watching this in December later this year and the video is 6 months old and you come and say, Ben, find me the 10% discount or Crystal, we'll be like, sorry, man, about that. But right now it's available. And for those of you that do decide to take safe, calculated action, for the first time in years, I can confidently say we can find a fucking deal.
Yeah,
and I like finding deals.
Yeah, for sure. There's obviously options there. My husband and I aren't in a position to buy this year. We've just spoken to our broker coming off the back of tax time and that sort of thing. So our plan is just to kind of save while we can, cruise while we can, take advantage of it. You've obviously just bought, and there are people out there taking action. There are people out there that are being a little bit more calculated. I don't even know.
Thanks for that fucking hospital pass, Crystal. That was a smooth transition right there as a question. So whether you like Crystal or like myself and you're thinking about saving some more cash or maybe buying something this year, we'd love to offer you a one-on-one strategy session where we can talk about where you are right now, where you'd like to be in 15 years from now, exactly where the market's at and what we're noticing, having bought the properties we've bought this year and buying every single week for investors like yourself. To book that session, just jump over to www.pumpedonproperty.com, click in the free strategy session with myself or my brother Simon, and you can take that session with a grain of salt, go and smash it on your own, wait around for a little while, or potentially become one of the small number of clients we work with each month. But either way, we wish you all the best. I personally, I hate to say this because I sound like an absolute wanker, but I like it when there's fear in the market. I don't like what that fear means, which is anxiety, stress. I don't like it when the average person's rent's going up and the house prices mean it's unaffordable in some cities for young people to get in. But as an investor who's also trying to set up my family and my clients' families and my future and trying to get time with my kids, I like when I can buy 10% below market value. I like when I place an offer, the agent actually picks up my call because they're not getting 200 calls on the property and 60 offers. So regardless of where you're at, we wish you all the best and all the safety moving forward. And thank you for this Australian banking system that pulls the handbrake on every 2 to 3 years, creates an artificial mini correction so that we don't end up like in America that booms and busts once every 15 years and property prices come down in a really, really bad way, really heavily all at once. So I'm grateful to be an Aussie and I wish you all the best this year. Cheers, guys.
Woo! That's a wrap.
That's a wrap.
Getting
Have a
cool,
spin.
bro. Yeah. Oh, sweaty. So sweaty. Oh, that's good. That's so nice, eh? Oh.